Financial education is the number one rule. I don't care how much money you're making. If you don't take your time to understand financial education, ask yourself a question. Let's start with that. Especially those of you that look like me that are listening to this. Your parents have been doing the same thing for years. They've been investing in mutual funds, stocks. They might not have done it at the level that you're doing it or the level you hear about it today, but they've been doing it. They've been buying real estate for as long as you know. Before you were born, they've been buying real estate. But has that changed the black wealth? Because we hear about black wealth all the time. Black wealth is real estate, deal, buy home. People have been scammed doing that nonsense. Scammed. A lot of people, millions of people have been scammed. But nobody talks about it. So I'm going to talk about it today so you hear me. Because a lot of you, when I talk about real estate, people come up and criticize what I'm saying. But today I want to address it. Let's understand real estate is an investment. If you understand the game. If you don't understand the game, you're going to just be a person just living in it. Right? You got to understand the real estate game before you jump in. Don't buy real estate just because you want to sleep in the house. If you want to sleep, rent. If you're looking for a place to sleep, rent. You could either rent an apartment or rent a house. It depends on how the size of your family. Rent it. Don't worry about what they're telling you that you're not building equity. Who cares? Don't worry about it. Because you don't know the person you're renting from, he's going through it. He's suffering. I bet you. He still got to pay taxes, insurance that goes up every year, taxes that go. He still has to pay all that. Nobody's talking about that. But they're telling you, oh yeah, you're making the landlord rich. It's a lie. What you should be thinking about is how do I become a landlord, not how I become a homeowner. There's a difference. How do you become a landlord is the key. See, I'm going to give you all some game today because I'm ready for you all today. And if you want to comment and fight me, let's go. Real estate agents, I'm going to hit you too hard because your job, especially black real estate agents, understand this. Your job is to be fully educated and educate your clients correctly, not just sell them a house for commission. What do I mean by you're selling them a house for commission? You're selling them a house for commission only. Why? Why are you doing that to them? You know somebody can afford it and you sell them a house. You should be honest with them and tell them how to really purchase. You have other clients that own a house that are struggling to pay. Have you called your client and said, listen, you're struggling to pay your house. I have somebody else that needs to rent their house out. Why don't you move over here and then let's rent your house out? If you're going to buy a house and you're so into it, you want to buy a house that you can make money off of, not a house that you're just spreading money out. A house is a liability if it's not making you money. Understand that. Let me say that again. A house is a liability if it's not making you money. Because there's so many people that have bought houses and they've lost their home because nobody's teaching them the rules, the game. So what I want to say today is this. When you're buying real estate, make sure you buy casual life insurance with it. Understand why do I say that? First of all, rent. Don't jump into home ownership. Don't get excited and get carried away for home ownership situation. All right? Fund a cash value insurance. I know there's a lot of negative press about it and there's some people that don't know how to sell it correctly. So understand it before you buy one. Hit me up. If I'm still alive, hit me up. Call me. DM me. Talk to me before you buy one. I have insurance agents that I've trained personally that I could send to you that will help you structure it correctly. And before they submit it, I review it to make sure they did it correctly for you. It's not about commission. It's about making sure that you are empowered. It's your hard-earned money. Because ask yourself, are your parents crazy? They bought a house. The house you're coming out of, your parents are living in it. Are they making money off of it? Have you asked yourself that question? A mortgage is a loan to buy a house. It's not something to celebrate about. It's a loan to buy a house. If you're taking loan, you're taking on debt. Take on debt that will be making you money. I bought my first house in 2006. 2006, my first property. At the same time, August of that same year, I purchased the casual life insurance policy. All I did was listen to a mentor that told me, Douglas, do that, and I did. My cash value insurance started growing, but here's what I did. I moved to my basement of that house, the basement of it. Because after I paid my mortgage a couple of times, I realized, wait a minute, I'm just wasting money. I said, I'm single. What are you doing, Douglas? You're a single guy. Your rent is this, your mortgage is this amount, but you're a single guy. What do you need the whole house for? I don't need the whole house. You only stay in one room. I said, my basement, I moved in. And guess what I did? I rented out the top 4 floors up to people that want to rent. And there was a lot of people that want to rent. Some of them are my friends. One I even gave a master bedroom and he paid a little bit more. My people, my monthly mortgage was $2,500 a month. But here's the deal. My rent that I was collecting from people, $4,000 a month. So in my mind, I was making $4,000 a month in rental income. Now, some people will say it's $1,500. Some people say it's for, I wasn't breaking, I was just, no. Why did I say $4,000 that is my rental income? Because, folks, think about it. If I don't have a renter there, I'll still pay $2,500 a month. And every month, $2,500 leaves my bank account to go pay the mortgage. But then every month, $4,000 came in. And once in a while, when the person moves out, $3,000 comes in, right? I put in a new person. So I designed an insurance policy that accepted $4,000 every month. And that became my income. And it went to a different account, but it didn't go to a savings account. It went to an insurance policy account, a life insurance policy account. That's where it went. So it went to a life insurance contract, and that's my cash value savings account. And I started building that cash value. Folks, whenever my renter couldn't afford to pay the rent, I had enough money in my emergency cash value life insurance policy to pay the rent. Whenever there's repairs needed, I had the money in my emergency savings account to fix the property. But then I replenished it because I was using that cash value as my emergency savings, folks. Let me ask you a question. Where do you currently have your emergency savings account? You have it at the local bank. I had mine in cash value life insurance. Here's how it works. Because I had it in cash value life insurance, you know what I do? I used it as leverage. Meaning, if for whatever reason, I took a loan from my insurance policy, the insurance company used my cash value as collateral. They use my cash value as collateral to loan me their money instead of me depleting my account. So think about it. For example, if you had an emergency in your home right now, and you have $10,000 in your bank account, and it's going to cost you $7,000 to fix that emergency, what happens? You go to your Bank of America or whoever bank you're banking with, and you withdraw $7,000 and fix your emergency, right? Now, how much do you have left? You have $3,000 left, right? Now, the question you didn't ask yourself, how long did it take you to save up $10,000? You and I know, folks, be honest with yourself. It's very hard to save $10,000. I don't care how much money anybody makes. To save $10,000 is very hard for some people, and some people might be easy, but still saved. But then in one day you write a check and you're down to $3,000, or you're down to zero. Now you have to start over again. But when you start over again, you lost the opportunity cost of the money. So, but with life insurance, with casual life insurance, when I take out that $7,000, I didn't take it out from my $10,000. Hey, I didn't take it out from my $10,000. I took it out from the insurance company. They gave me their $7,000. While my $10,000 continues to earn compound and interest and growing. And it continues to grow because it's still making money. But the $7,000, I just paid the insurance company back whenever I choose. If I choose not to pay them back, it doesn't matter. It doesn't affect anything. It doesn't affect my credit. It doesn't mess up nothing. Because the money is due when I die. If I don't die, eventually when I have the money, I could pay them back with no problem. And it's so easy to take money out of my casual life insurance policy. It's very easy. I don't have to, there's no credit top rule. I don't have to prove nothing. I don't have to show my credit. I don't have to do any of those things. I don't even have to Do an appraisal like you have to do in a house. Folks, the game is changing. You need to understand the game. And then the next thing is, as you are building and you decide to buy a property, you need to protect it, because here's the deal. The life insurance becomes a trust. Douglas, what do you mean? Well, a trust is a way for me to give stuff to someone privately. So what is the most valuable thing that you could give to people? Money. You work hard for your money, so the only way I could leave a huge amount of money to people I want to leave it to is by making sure I create a trust, right? But life insurance is already a trust. A lot of people don't know that, because I could give $1 million to someone when I pass away. Because is that what a trust is? A trust contract means you are leaving your assets to people when you die. And you also want to be in control of your asset while you're alive. So the first asset that we all have is cash, where we make our money. So when you park money in life insurance, that's your asset right there. And it's protected inside a life insurance. Nobody can touch it. But at the same time, you have a death benefit on top of your head based on your income and your net worth. Right? So once you park money in there, you're protected. If you die, whoever you want as beneficiary is who gets the money. They get the money 100%. Doesn't matter. Nobody argues. It doesn't show up in any court case. But a house that we've been programmed to live for our children, not lie, it's a lie, folks. If you die and you don't have a trust in place, a contract trust paper to protect the house, it goes to probate court. So how is that generational wealth? See the lies they've been telling you? So the other thing, if you're now going to buy, see, when you're renting, you don't have to worry about it, because it doesn't matter, right? Because it's not your house. You're not on the title. The day after you now have this knowledge that I'm sharing with you and you go buy the house, you make sure you buy it where the trust owns the house. Visit douglasaz.com for more information. Okay? Because a trust is a contract to own your house. It's a contract. It's a business on its own. Once you understand that it's a business on your own and you structure it correctly, then it owns your house, so you could pass it on to your children if you want to, quietly, with nobody taking it from them, ever. There's ways to own properties correctly. I'm sick and tired of buying properties at a discount from families that built their whole entire life on real estate and they lost it all because the guy is sick and laid up in the hospital. I'm sick and tired of that. And a lot of times it's the people that look like me, losing properties every day because they're laid up in the hospital or because death happens and they don't have enough money to pay. Well, the black family is losing properties based on property tax. So many properties are being sold on tax liens, and you investors, you're so happy to buy tax lien properties. You're so happy to buy tax lien property. Have you ever asked yourself, how did that property get into tax lien? These are properties that have been paid off, but the children couldn't afford to pay the loan on it. Folks, listen, I'm sick and tired of families losing their business off of simple things that could protect it.